Good afternoon, traders. Welcome to the second summary of the day video in this year. And changed a bit my trading style. I'm not aiming just for the first 15 pips. I'm for sure looking at this price level to see if the wave will not make a reversal, because usually it likes to. So that it was the reason why I, for a whole year, was looking for 15 pips waves, and I'm trying to move to catch bigger moves, and it is now working very well. 2 days ago I got almost 1 to the 9, and today over 1 to the 12. So perfect. In just 2 trades, 21 was possible to catch. And so all about the belief, the trust, and if the answer is correct, then we need just to see the logic, save TP, maybe even few on the way, like TP1, TP2, TP3, and really just manage the transaction correctly, without greed. Yes, it's not based on my greed that I like to catch 1 to the 10 in this year, but my goal was always to trade as less as possible. This is just for my future. I want to take maybe 1 trade a week to be totally free. Now I know that after these 2 trades I have an opportunity to not trade more. It's of course all about your account, but this account can be grown, right? We can do this from 1000 to 10 or from 5 to 50. It's a matter of time, but when you have reached your goal and you have your dream account, then it is just beautiful thing to trade 1-2 times a week, to feel the life. Yes, I made me very busy by creating the group. It was my old problem with overtrading. It is just my solution to make me busy as much as possible to work with you. But if you are just one person army, and you can catch bigger waves, this is the perfect way to say bye bye to your boss. And I wish you this all in this year to reach your goals, to be really good traders. Okay, today I didn't share the charts, honestly, because in my land in Poland we have a bank holiday, and due to that beautiful day, kindergartens are closed, and some of these also tomorrow. Tomorrow is normal working day, but our kindergarten also wanted to be closed for a longer weekend. So kid is with me today all the time. It wasn't easy to trade, to analyze, to talk with you. So good for me that I didn't need to change my charts, because if an Asian session price is dropping, and a lot of us begin the trading day on Frankfurt or London, and you're opening your platform and you see dropping market, what should be your view? To join the sellers, the heavy drop, or to think maybe more logic that, oh damn, so long drop, but every drop need to stop somewhere. And then here we go, we have big demand zone, huge fresh area. It is better to wait to see the buy setup on so bearish market. Yes, break of structure, huge compression here, and market is dropping. A lot of retail traders think like that, and they want to join the market, join the sellers, because they don't know that we have something like demand. Demand zone is a zone with usually limit orders. It's a previous zone of interest from the biggest players. They broke some structure before for some reason, and probably they have here limit orders as a investment, like 1 week investment or something like this. And retailers don't know this, and they want to join the wave. So this looks like we are trading very aggressive, right? Because dropping market, we are looking for a buy, We see the big rally and we are looking for a sell because we are waiting with patience to decreasing volume for our pattern with liquidity grab. And it is the moment when a lot of traders are trying to buy forward because of ranging market, because of taking a breath, but we all know that this is the supply and we like to sell. This is beautiful. We are doing opposite things than retail traders. So that's why our trades usually are very fast, because this is the catching the momentum. Then I'm talking too much now. Sorry. I feel just way better than 2 days before in front of my microphone. I'm not so shy as last time. Okay guys, so let's start finally this video. So for example, we are somewhere here. Yes, this is after Frankfurt opening time. So if you have correctly drawn your zones, this should be the first thought in your head that yes, I am waiting maybe 1 hour, maybe half hour, no matter how long, because we are above the demand zone. So my focus on this dropping market is to look for a buy. It should be like this, the first thing in your head, in your mind, because it was just like 10 pips above the zone. My zone is drawn a bit different. This is the 1 hour demand, and here inside, I probably explained this yesterday, is the M15 demand, so zone inside the zone, like a double shield. And here, by using the splash indicator with the type set to time, here was the bubble, the blue bubble with splash. I just don't want to put it now because something is wrong with my computer. It's freezing when I have too many indicators. So I don't want to do this now, but believe me, here was the splash. So I also thought that here was the critical moment to break this previous supply, and then was boom to change the market structure. So I marked this as a blue, as a more important zone than the bigger one. Okay. So if you are opening your platform, you see the demand. Think about setup. The opposite one, the buy. Don't think like a retail. And what happened? Why I choose my buy, and if maybe there were some another options. After here, the first reaction, it was indeed strong push to the down, but it is just the higher edge of the zone. This is something what I mentioned also last time. It is risky to take a trade from just the first kiss of the zone, especially that this one wasn't deep. Then by missed, for example, I got a question why I wasn't looking for entry here on private message. Look at this, imbalance was pretty good. Yes, 28 on the ask side. Why there was a loss? Because here we see the rejection wicks, but of course the first thing, just a small kiss of the zone. Then rejection wicks, prices going down, is bit breaking this imbalance, the previous one, and by going second time to the second imbalance, what we have? Just imagine that we don't see anything more. Price is going here. Yes, it's losing volume, I agree. It's very low volume, definitely lower than the bullish candle. So it looks like invitation. But what we have here, small trap, yes, here we have equal highs. What could be the potentially invitation to take a sell for a liquidity grab. So if I see something like this, it is very high chance that here's some supply, maybe missed, maybe we didn't drew something. Yes, here we have trapped sellers, ranging market and then drop. Price was delivered to the demand, so maybe here is supply. Yes, let's draw this. Maybe here is the supply, and here just below this supply looks like creation of the equal highs. So it would be risky to take a buy from here. even by measuring the potential of this trade, was 4 pips, right? Very, very small. Maybe you would aim for, of course, for some bigger thing like this equal highs as a 20 pips, but we need to take a look on all the zones on the way. If these are used, fresh, weak, strong, how much volume, how strong leg out went from the zone. And here definitely it was too close and price made equal highs, right? It is dangerous that it could be just one trade candle and then boom to the downside. And it happened, yes. Let's make it like this. So we need to be sure, take a look on the previous few candles also, how the price action looks like. He was very dangerous, and yeah, what I want to show you now, the footprint chart, as I already shared on the Instagram. On M5 it looks very interesting, and honestly my trade was based on, I hope you remember my member contribution about my little theory about where the banks place the biggest limit orders. It is about absorption. Ed, I know that Ed is a very big fan of absorption. He can perfectly match this and he uses this on his trades, but I really love to take as safe as possible trades, and my belief, as I record on this short video, is that I was looking for a reason why the hell the big guys are so strongly selling and the buyers are absorbing this power. These buyers seems like they are stronger. Take a look on this volume here. They are impatient and they want to buy right now. They are happy with the price level and they want to start their adventure. And take a look on this, 170, 108. These are on the bottom of this candle, heavy orders. So it could be expected the even lower, deeper invader. So I asked myself, why someone put so strong, so heavy order at the end of this candle and the price shot up. So in that theory from the member contribution, I mentioned that maybe somewhere deeper is the true limit orders. Maybe these sellers also wanted to take a buy. Of course, this is very controversial theory. I'm still testing, watching this, and I talked with a lot of you by private about this. Many of you didn't agree with me. Some were impressed. Very good. Yes, I didn't put this into the course. This is just for discussion, to test, maybe something new, something that I didn't find on any other YouTube video course or something like this. This is just what I think, what I like to see. Of course, this is very good when after absorption the price is shooting up, or after retest of this absorption is shooting up. But the safest ever is when the price is taking what was below or above the absorption, if we are talking about supply. So today I found once again this little theory working well. So it was my own logic that yes, finally the buyers gave the chance the previous sellers to also join them with the big incoming rally, especially with lower volume, and I was happy. Yes, then I was looking how to enter when my imagined orders were filled. So as I said, yes, this is very good to create your own stories in your head. Like I have with the locomotive, yes, that we should jump to the locomotive when the station it is staying after braking, yes, and this is how I see the low volume entries. It is better to jump to the locomotive when it's waiting for new passengers than to running locomotive. Ed have nice explanations as a fast driving car. and the wall before the car as an absorption explanation. This little story is really it's making the way of thinking way easier, and also like this explanation why so heavy orders are blocked and absorbed, because I see that lower could be something interesting. So that's why the sports car want to drive so fast, maybe to break the wall, because after the wall is something nice. So stories sounds funny, sounds maybe sometimes stupid, but I love them. The story is helping me to understand the market, and when I see the same stories repeating over and over again, I started to believe on this even more. So that's why I get confidence on my entries, and I have no Angst. Das ist deutsche Wort. Sorry. No. I forgot how it is in English. I'm not scared. Oh, sorry. I am not scared. And my entry was after this candle on M5. Let's move to the M1. It was a while ago. 1107. It was here. So here my imagined limit order were activated. Yes, volume decreased a bit even later from 150 to the 30. Yes, it was decreasing volume, and then we had a fresh first high. I love this. The small supply was broken, heavy order also here, and then I found the imbalance. Oh yeah, the 32 to the 6, the first big order, which was a rejection candle. So I found this imbalance as a nice one, as a big one. 32 to the 6 is over 5 times more buy contracts than sell, and this candle has a 86 volume, and it decreased to the 22. So almost 4 times lower volume, even better than just 2, of course. It was the rejection candle and rejection. I mean, these two together were like a rejection. Yes, this one ate this one, so we have small body on top and a rejection wick. So after this rejection from the higher edge of the demand zone, I was fully focused just to enter the trade. And I caught here almost 40 pips. I was aiming for this line. Beautiful rejection, as I'm not say expected, because I haven't crystal ball. I chose this price level later because I was tired, because I have kid at home. I was at first, my initial TP was here very high, as at 55 pips. It could be 1 to the 18 or 17 hour trade. Very high, very strong. I didn't feel too confident with so long holding. I don't like to be in trades so long. And then I realized that on a 5 time frame, here looks like supply. Yes, big sell imbalance. On the bid side we have here 49 contracts to the 0, and it was broken. Looks like a high want to be made. This lower high was broken, and looks like the buyers really tried to control the market. It was also nice price level as a beginning of the compression. I like the beginnings of compression as a TPs. These are very good levels. If I'm, for example, selling, yes, these are very safe. And these buyers failed. Yes, here this high wasn't broken by the next one, and this price fell down. So I thought that here this whole thing could be like a supply, but I didn't find for a second day a clean supply for me. Any big leg outs with as small as possible base, and I just had 2 demands. So I found that this block could be the order block. Something happened here. Buyers appeared once again, also failed. So I just used the wick. This is just a horizontal line, but I was focused on this wick. It was retested here nicely, but I wanted to see this during the London session, not by Asian session, right? So once again, as confirmation that this is the strong key level, and it was perfect by a weak rejection. Maybe I got luck this time. I don't know, but the trade was insane. Very nice one. Then how this move looks like. This here is a compression, and this looks like a final push. I could agree really with why Jeffrey took the sell here, because this zone is really nice, interesting. By catching this wave, it could be 13 pips, yes, to the big imbalance on M5. M5 imbalances are stronger than the M1 for sure, as everything from the higher time frames is better than just the lower ones. Let's take a look how the price action is on the M1. Beautiful, right? We have big imbalance on the seller's side, and the volume. Yeah, I would maybe also be interested on this, yes. After here, this is also looks like the small demand, ranging market, shot to the up and going down, yes. These two candles are like one big rejection candle. Here also, even on M1, this is like a compression. So few nice confirmations that this could be the interesting trade, but we need to focus also on the imbalance from here, same as on the M5. So the trade could be like really the 11 pips by entry from lower time frame. By managed correctly, if someone was aiming lower, of course this one move, this one candle was deleting the range like here. Even by managing, yes, price is ranging and then shot to the down could be a sign of liquidity grab, especially that here we have the demand zone. And maybe not so important, we still were above the VWAP, so it could be the sign that buyers are stronger, that the buy volume is bigger than the sell volume. Yeah, so if some seller was taken here, I would be also looking for a buy. Yes, if we have here a demand zone, imbalance here filled with decreasing volume. Take a look, guys, how this volume was going down. Every single candle it was lower and lower and lower. With safety P 3 pips, back to the level, for example, it was 1 to the 4. Sorry, like throat. So I would be looking to continue this nice push. It's look perfect, right? Demand, equal lows, ranging market creating the support, and then boom to the down. Was the volume high here? Yes, was. Look at the volume bar from this bearish candle. Very good one. And then shot to make a first high. Even this move created another demand here. It's ranging market and a big leg out which broke everything before. And probably I would be not surprised if the price is really still on the bullish move and want to reach my blue box, which is what it is. Here we have the Asian high. It also looks like very shy compression with last push for a break. So I would say that this is the buy for a sell to get a better price, the higher one to earn even more. So this is from the smart money concept, and here I also see maybe trap buyers, here a lot of buy imbalances, and what is interesting, I would also mark here the yesterday's VWAP, also already retested, but in Asian session. I don't like the price action from Asian session as something respective, only the high and low. So if some zone is created on that session, I not trust. I don't trust these. I just take a focus, and this is thanks to Jeffrey. I maybe 2-3 years ago used those levels. I forgot because I couldn't find any logic on this, and now I love to watch them. So we have yesterday's VWAP, broken by imbalances, Asian high, so many nice things on the same similar price level. So I would be really not surprised if we can reach this. So my trade could be very large as a 55 pips to this box. I don't like that, like pullbacks like this. Yes, for me every pullback brings some risk of taking my hard-earned profits and giving it back to broker. Because who could, of course, predict or expect that this imbalance will hold the prices? We cannot be sure. So that's why we are managing our trades. This sell could be, of course, big winner. We cannot predict anything. We are only reacting. So if I was setting my first TP here, and then I thought after a while that compression is forming, oh, then maybe this level is better. So I moved it lower. For how many? For, yeah, like 16 pips less. But I feel good with this. Yes, it is my first 1 to the 12 trade since I became your educator. And I'm very, very proud of this. That in just 2 trades I could get 1 to 21 with just a more brave view of the charts of where I can set my TP. So it is way better. Last year I was taking 3, 4, 5, sometimes even 6 trades a week, and now 2 can be enough. I hope that any one of you is a greedy guy, and you all maybe are just trying to understand my concept about money. I understand that a lot of you have just small accounts, like 500, 100, and it's the thinking, oh, then I earn today just 30 euros or 50 or 10. But if you have 100 euros account and you earn 10 euros, this is 10%. This is something insane. Look at the percent. Because when you finally will grow your account, the same 10 will give you monthly salary. So percents matters really. Just we need to be mature and don't attack the market with too many trades. Please guys, don't do this. Thank you very much for watching, and yeah, see you tomorrow on the first this year webinar. Thank you for watching, guys, and have a nice the rest of the day.